A very warm good evening to one and all present here. I, CA Ashish Agrawal, a Managing Committee member of Nagpur branch of WIRC, welcomes you all in this session organized by Peer Review Board on compliances with standards on audit documentation SA 230. We all know, being professional, the importance of audit and its documentation, and what happens when peer review merge with it. Its intelligence, its diligence makes it more important. The same is organized by peer review board. I would like to introduce the chairman of the board. He is an active professional with more than 2 decades of experience in profession. He has served as the chairman of WIRC during 2017-18. He is a dedicated professional and presently acting as a chairman of peer review board. I welcome him with a big round of applause and request him for his brief remarks.
Thank you, Ashish. Respected the speaker of this today's program, Amitesh Agrawalji from Calcutta, my younger brother, and the branch committee member from Nagpur, Ashish Agrawalji, senior in the profession, ladies and gentlemen. Friends, I welcome all of you in this today's webinar on compliance and standards on audit documentation. Friends, I will not discuss about the fundamental of the subject because our expert Amitesh Agrawalji is here to describe in crystal clear about the all my topics and fundamental of that subject. Friends, peer review is the necessary because where board has given the mandate that where my more than three or more than three partners, if any partnership firm is having, and any entity, any our chartered accountant firm is doing the audit of the listed companies and their subsidiary companies. And friends, we are also revising the guidelines of the peer review board, where if any our entity is having the unsecured loan, secured loan, any type of the loan from any of the entity, 50 crores and more than 50 crores rupees, either he has taken during the year or take a outstanding balance from last year also, and we chartered accountant is auditing of that particular entity, our firm must be the peer reviewed firm. Friends, this year, particular year, we have exempted for the bank audit. And from next year, if any chartered accountant firm is accepting the bank branch audit of either cooperative bank, either any of the bank, their firm must be the peer review firm. Friends, so my request to each one of you, if you have not applied for the peer review, please apply for the peer review. My chartered accountant firm is afraid, sometimes they are afraid that some other chartered accountant will come and review my all the books, all the documentation part, whether I have taken the all the documents or not. Friends, you need not to be worried. The person who is coming to your firm, the only he will review the documentation part with the time of audit and certification work, whether you have taken or not. Friends, in spite of that, you if you have not taken, if your papers is not available with you, friends, for the future purpose, only the checklist will be ready for the future audit also. And from board, we will give we will give to the advisory. These papers must be you taken at the time of the audit. So friends, my earnest request to each and every firm where partner is more than three and more than three partners, and if you are satisfying any of the criteria for the peer review, and if you are not satisfying any of the criteria, and if you are going for the CAG empanelment also, friends, 25 marks is given by the CAG if your firm has been peer review firm. Friends, so with these words, I thanks to my each and every person for attending this webinar, and speaker and moderator Ashish Agrawalji and Amitesh Agrawalji. Friends, I am also vice chairman of the International Tax Committee. We have came out with the Income Tax Act 2025 and Income Tax Rule 2026. The combo price is only 1,200. If you want to buy only income tax act, price is only 500. And if you want to buy the income tax rule, only price is 700, and both the price is 1200 of the rupees. So my request to you, if you have not buy from any publication house, just you order from at our portal, and within 7 to 10 days, this book will be delivered at your address. With these words, I thanks to my each and every participant to present here. Thank you, friends.
Thank you, Chairman, sir, for your brief overview on peer review board. Your dedication in profession and committee sets an example for all of us. Considering the hardship of the topic, we have a very experienced and knowledgeable speaker in front of us. Hello. Just a minute, sir.
आपके यहाँ से आशीष जी दो खुले हुए हैं।
अभी आ रही है सर आवाज? हाँ सर. Considering the hardship of the topic, we have a very experienced and well-known speaker in front of us. He is a third-generation practicing chartered accountant from Kolkata, secured All India rank 5 in ICI's DISA exam, and is a certified forensic auditor from ICI. He is a special invitee member and independent faculty across multiple ICI bodies. He is pan-India faculty and regular speaker for ICI conferences. He expertise in audit and assurances, peer review procedure, practical AI applications for CA practice. His strong data analytics and MIS implementation skills and development of utility tools for chartered accountants are well known. I request everyone to welcome our today's speaker, Amitesh Agrawal ji. I hand over the session to our speaker. Over to you, sir.
Hello.
Thank you, Ashish ji. Thank you to the peer review board for giving me an opportunity to deliberate on the topic of compliance with standards on audit documentation. Now, to start with that, let me first tell you that this topic is a corroboration of not only the standards in auditing, but we will try to deal with a lot of aspects of the practical overview of the peer review aspects wherein the reviewer has to deal with and also report it. So it's a two-way thing. We have to also consider that the requirements stated in the peer review process are twofold, wherein the firm has to establish that yes, they have documented their process in a correct manner, and the reviewer, on going through those documents, is able to report that whether the firm has complied with the same or not. So the main object of peer review is to ensure that the PU complies with the technical, professional, ethical standards as applicable, and that PU should have in place proper systems, including documentation thereof, to demonstrate the quality of assurance service is rendered by the PU. Now, the aspect of today's topic is wholly and largely dependent upon the documentation part wherein, and over here we have to understand that there are twofold aspects wherein the documentation is one of the pillars through which the PU as well as the reviewer is able to establish yes what he has checked, what he has reviewed, and the PU is able to establish yes these are the procedures they have conducted in order to arrive at the conclusion that yes their opinion was correct in the nature based on the audit evidences obtained by the PU. So, if I tell you that in order to comply with the technical professional ethical standard, what is meant by technical professional ethical standard? Just a brief recap thereof. So, there is also aspect of guidelines on peer review, which you must be aware of that the peer review guidelines are there, and in this clause 223 of the peer review guidelines states that uh, technical professional ethical standard means the accounting standards vis-a-vis issued by ICI as well as company under the MCA, the INDAS as well as standard issued by ICI being engagement quality control standards. Now, SA 230, what we are talking about today, is encompassed under the standards on auditing. And let me also clarify on the risk of being repetitive. The SQC is a very integral part of the standards on auditing, and we should not read that on a standalone basis, but it's an overachieving policies and procedures wherein a lot of aspects are dealt with in this SQC, and which on a tandem basis we have to follow during the course of our audit procedures in this nature. And likewise, there are standard statements and all those. I'm skipping that, but the thing was that this standards on auditing is encompassed under the technical, professional, ethical standard. Let us be very clear about that. And the firm has to ensure that they are complying with the same. Now, to add to that, as far as there is another lens on the aspect of SA is there, that while discharging the attest function, the auditor should ensure that the essays are followed in audit of financial information covered by their audit report. This is also mandated by ICI. And there's also clear linkages between SA non-compliance and disciplinary proceedings. I will not get into that, but I'm just giving a brief aspect there too. Even code of ethics plays a very pivotal role, wherein a lot of aspects it has been observed that if the member is unable to comply with the standards on auditing and on a large scale basis, then he might also face disciplinary action there too. Because this are one of the pivotal areas, the standards on auditing are a pivotal area, considering which those procedures, if the auditor follows, then his quality of audit is enhanced and he can practically demonstrate that it has been done in the best manner possible. And SA 230 is nothing but documentations and working papers in support of the procedures being carried out by the auditor. Needless to say, SA 230 is what has been done, is being amply demonstrated by those working papers, is what SA 230 audit documentation is all about. Okay. Uh, Going towards the referring towards the annual activity report issued by PRB, which is also available on the PRB portal, peer review portal. Uh, Let me also tell you, friends, apart from this certificate of peer reviews being issued, there were also a lot of advisories being issued by the peer review board to the practice unit in the case of non-compliances observed during the course of peer review. So during the council year 2025-26, 145 PUs were issued, various advisories thereof, and this is the chart thereof. You can also refer to the PRB website for the same. And out of those advisories, the maximum aspect thereto of non-compliances which the board has observed was in relation to standards on auditing and SQC, followed by accounting standards, thereafter the ICI guidelines and Schedule 3, the case may be. Now, if we see to this slide, again, this is again emanating from the annual activity report of PRB 2025-26. Over here, please see to that we are saying that the maximum amount of advisories were issued in the case of SQC1 non-compliance. Okay. Now there is a common myth amongst a lot of members in this regard that SQC is a standalone statement which may not be a part of standards on auditing, which is altogether a myth. Let me be categorical about it. It was and it is always mandatory, and it was in existence since 2009 itself. It cannot be said or it should not be read on a standalone basis, but it is one of the most overachieving feature of the entire standards on auditing. Okay. And we'll come to that on a later aspect of certain documentations which the members have to ensure to comply with SQC1 aspects there too. And thereafter, after SQC1 is there, we see that it was followed by SA 230, the overachieving standards on auditing documentations, followed by SA 505, the external confirmation. Now, if I tell you a brief overview of the external confirmation, the major problem with the firms is that although they are obtaining external confirmations, but sometimes they are unable to properly document it. First and foremost is we need to understand this external confirmation request should directly flow from the premise or the email ID of the auditor and not that of the client. Vis-a-vis, the responses there to also has to be received directly by the auditor and not through the client. This is one of the areas in wherein it has been observed that a lot of places the auditor is not having control over the external confirmation so sent, or either he's taking help of the client or relying on the document shared by the third parties to the clients, and then he's taking it as a external confirmation, which is not the case. And the standard is categorical about it that the auditor should have control over the same, either it be a positive confirmation or a negative confirmation, vis-a-vis. Another aspect is that wherein the auditors are failing in SA 505 is even after those confirmations are obtained, the mapping thereof has to be done on a proper manner, that whatever was the confirmation obtained, what were the underlying figures with the books of the clients, and in what manner has the auditor performed procedures to verify those. So in simple manner, if I tell you, suppose a loan confirmation request was signed by the auditor to the third party and the same has been received. In general parlance, someone might say that, okay, the balance as per books was suppose 5 lakhs and the loan confirmation request so received was also matching as 5 lakhs. And one can take it off and say that is done. However, let me tell you, the working paper in this regard is said to be incomplete. Vis-a-vis, why? Because we need to understand the working paper should be in a manner that it is able to demonstrate what were the objective of this working paper or the procedures been conducted. What was the procedure being done? Who did the procedure and what was the result thereof? If I just take it off all both the aspects of this, yes, this amount is matching with the financials and I keep it in my record, the working paper will not be able to demonstrate that yes, I have verified the same and whether there were any differences there. Uh, on later on aspect, again, we'll deal with that. I was just giving a brief aspect there too on a practical aspect. Now, let me also tell you, SA 210, followed by this where SA 210, this is in relation to the engagement letters. Engagement letter has to be obtained by the auditors in all regards, and it cannot be taken a leeway that it is not material in nature, it is a mandatory in nature, and sometimes the auditors are missing the same. However, let me also tell you that the Center for Audit Quality Directorate had come up with excellent utilities for generation of engagement letters thereof. Vis-a-vis, parallel reference is also drawn SA 58T, wherein the MRL, Management Representation Letter, is also mandated to be obtained in terms of the standards on auditing and other requirements. However, the degree of reliance of MRL should also be understood, that each and every aspect, although certified by the client, will not be sufficient enough for forming an opinion, which the auditor must understand. And for those MRL also, there are certain formats which have also been released from time to time. And the latest format, I guess, was released 3 4 months back again by CAQ, in or a double A, sorry, by the double ASB of ICI. In the name of the document is in the name of FAQ and MRLs. Over there also a lot of formats are available. Okay, moving ahead. So taking excerpts again from this PRB activity reports, wherein certain non-compliances on a generic basis were reported. So the most common non-compliances which were reported in this case was quality control manual not maintained or updated. Now, friends, let me tell you, this is a part of SQC, and not having manual is a direct non-compliance of the requirements. It cannot be said that my SQC manuals, I am following the same, but there are no manuals in place. It is a kind of constitution for us. We need to understand, and the policies and procedures are eminent. The audit works and the manner on which the practice of the firm is taking place is emanating from those quality control manual. We can, someone, there are also cases wherein someone is saying we are taking the policies and procedure as per SQC1, which is there, but then they are not able to demonstrate that what is the policy, or either they are just copying and pasting the same as is basis without able to demonstrate that what is the, how are those policies being implemented. So let me tell you, once we are also adopting those policies, the firms or the practice unit should ensure whatever is mentioned is practically being implemented by the firm to the best possible manner, and it should not be a very it should not be in a very it should not be compartmentalized by the firm, that this is possible so I'm including that, and if this is not possible, I'm excluding the same. We need to understand that the main aim of this quality control manual was to enhance the quality in this regard. Okay, followed by the aspect of annual independence declaration. Now, also let me tell you, this QC manual annual independence declarations, the formats are easily available. Those were given initially in the implementation guide to SQC. That document is available, and that is since 2009 that is available. Followed by another document which was released by the Center for Audit Quality Directorate, in the name of firm model policy referencer, firm model referencer. Okay, manual or firm model referencer, wherein again a lot of policies are there, but copy and paste things should not be done, and the firm should follow those policies in a manner that suits them the best. Okay. As regards the annual independence declarations are concerned, as far as the SQC goes, it says that the firm should mandatorily obtain annual independence declarations from its partners and senior personnel and the staff in this regard. There have been a lot of cases which has been observed that those independence declarations are not obtained, and it should be understood that those independence declarations should be received in a timely manner. Even if person is joining the firm in the mid of the year, then also those joining checklists and all those independence declarations is a must, and it cannot be alienated, because independence is one of those pillars of an audit profession, and this document helps in assessing in the manner the firm says that I am independent, although there are other procedures, but this cannot be alienated. Okay. Absence of policies for outside consultation, etc., are also there. We'll deal with this on a later aspect in later slides. Then SA 210 I've already dealt with that engagement letters were not obtained. Furthermore, the appointment letter is also very crucial enough. And let me tell you, it is not only for the company's appointment, a company's audit, but also for it be internal audit, whether it be for stock and receivables audit, whether it be even for tax audit purpose. Those appointment letters are pivotal in nature and should also be taken on record by the firm at all places. SA 230 we will be dealing with. However, the thing is that the most common type of error or observation was that supporting documents were not on record or not in terms of the requirement of standards in auditing, and there were no formal systems for noting unusual areas or what were the procedures and how review was done by the audit team. We'll deal with it in our later slides. Then the case of SA 260 and 265 non-compliance, those relates to documentation of the communication between the audit auditor as with the management or the TCWG, and it was observed in a lot of places those documentations were not on record. In fact, NFRA also come up with certain uh, findings that this needs to be enhanced. And as an auditor, we need to understand this. SA 260 and 265 communication plays a pivotal role wherein the auditor is able to establish this takes place. However, the only aspect is sometimes the auditor is unable to document the same in a proper manner, and that gives an idea that those have not been communicated. However, that is not the case. So even if those emails are there, even if one says it has been verbally communicated to the management, one should ensure that those communications are properly documented, either through in the form of documents or directly in form of minutes, and those should be signed off by the client so that it is properly acknowledged by the same. In case those are not written documents but oral ones, then we should understand that this should be properly documented. SA 300 and 315. Now let me tell you, this SA 300 is dependent on the audit planning. And this SA 300 audit planning is emanating from a very important aspect of how the basic aspects of the audit, on what manner is the audit to be conducted, and how the auditor should proceed or the audit team should proceed. Now, audit plan and audit programs are one of the key areas. However, it has been observed that in a lot of places, the audit plan is not documented or is documented in a very vague manner, which sometimes does not give an indication that the audit was planned in a proper manner. For this aspect also, let me tell you, friends, we can take help of, there are certain documents released by AASB of ICI, Standards Audit Working Papers, wherein a lot of aspects of this as working paper templates are given by them, and one can take help of this templates to demonstrate that this kind of documentations are taking place, whether it be team mobilization or the audit strategy or kick-off meetings with the clients as well as the engagement team, which enhances the aspect of working being done by the firm. We are doing the same, but we are lacking in terms of documentation to a certain aspects, which gives the third parties a place to point fingers at us And in that fashion, we should be considerate enough to try and document it then and there, so that this kind of issues are not cropping up in future. Furthermore, this enhances our quality, which is one of the main reasons of this peer review or any review exercise being conducted by ISA or any regulator. Now, SA 315 dealing with identification and assessment of risk of material misstatement through understanding of the entity. Now, in this parlance, let me also draw a parallel reference to SQC, wherein also we are having an pillar of client acceptance and client continuation. So SA 315 can be read with that document, wherein we have to first document the manner in which once a client is coming to us, we are obtaining background checks regarding the client, the manner in which we are accepting the client, those checklist formats, the documentation should be done. And only on the basis of understanding of the client, then we decide whether we should accept the client, or either in subsequent we should continue with the client engagement. And in case we are doing the same and we have accepted the assignment, only after having a proper knowledge of the entity, then only I can say that I can proceed with the audit. Suppose I am not having knowledge of the oil and gas industry, and I have not obtained any understanding of the entity's business. In what matter can I say that I can conduct audit of that entity if I do not have the understanding of the entity and its business in this regard? So please understand, SA 315 is an integral part and a practical approach. And only after obtaining an understanding of the entity, we can proceed with the identification of risk of material misstatements and the gaps in the internal control. Because if we do not understand the entity's operations, or the internal controls in detail, we will not be able to identify the gaps or the internal control lapses which might be emanating, or the risk which might be there. And then we might fail in addressing those audit, we might fail in planning our audit programs in a proper manner, which might lead to issues in our audit thereafter. Materiality. Materiality again is not subjective. Let me tell you, it should not be done that it is very subjective in nature. It is totally dependent on the professional's judgment based on the underlying financial statements and other aspects, including understanding the entity and the industry in which the entity operates. And let me tell you, in a lot of cases, it was observed that the materiality templates were not found in order, or they were missing. Now, it is also very important to note that this is an important document, and one cannot say that materiality is computed just at 5% of the turnover or total assets, as the case may be. Blanket should not be used. However, we should be able to document the same. And for that purpose, the Center for Audit Quality again has come up with an excellent Excel utility, wherein we will be able to map the risks to a greater extent and also compute the materiality to that extent. And thereafter, we'll come to that in later slides. Just a brief overview I was giving to you so that you are able to grasp what I was saying. And then additional confirmations I've already deliberated a bit. In later slides, we'll come to that in detail. Regarding the sampling. Now, one of the areas in which the auditors are failing to understand that sampling is not a myth. Sampling we are doing, but we are unable to document it properly in the manner what are the samples selected. And regarding the samples so selected, those documents should be available, the methodology through which we have selected the samples. All those samples, all those supportings in relation to the samples which we have selected should be there. And the workings and the audit sorry, audit procedures so conducted on those samples should be properly tagged and correlated, because only on the base of those samples which we are drawing, we are conducting our procedures, because 100% or verification by an auditor is not possible. That is the as well as each and every one of us are aware of the same. That is why through our standards on auditing, we are categorically stating in our reports as well as other places, based on the proper standards on auditing being followed and on the samples selected by us. So this is very important in nature. If there is any issue with the sampling, then our entire opinion might get changed. Or if the sample is not drawn in a proper manner, then it may yield incorrect or improper results, and then thereafter again have issues with the audits as such. Okay. Audit reports, let me again tell you, friends, this is the main deliverable, one of the most main deliverable as an auditor. The financial statements, etc., are prepared by the client. The disclosures are made by the client in all regards. And however, the only deliverable which we as an auditor are having is the audit report with us. And as far as standards on auditing is concerned, SS 700, 701, 7056, all those deals with standards on auditing in relation to audit report. And for that matter, we also have an implementation guide on reporting standards released by AASB, which should also be referred. One of the main key areas in the audit report non-compliance which was noticed was in relation to the formats of audit report or the opinion paragraph and the basis for opinion paragraph being not placed in a proper manner, or EOM being used instead of the qualification aspects there too, vis-a-vis, and we should understand this nomenclatures also play a very pivotal role. Likewise, in case of ES non-compliance, we will also observe that disclosures was not given in relation to the manner of cost ascertainment of the inventory, whether it is on weighted average method or likewise weighted average method, FIFO or something like that. That should be understood, that it should not be just mentioned. The valuation aspect is sometimes mentioned that lower of cost or NRV. However, we should also mention the method in which the cost is ascertained. The significant accounting policy should be disclosed in a proper manner, and this goes in hand also for India's aspects. And let me also tell you, these observations in relation to non-compliance of standards on auditing, as well as the accounting standards, is also an aptly applicable to non-corporate entities also. So this significant accounting policies or inventory valuation policies or revenue recognition policies should also be present properly in terms of non-corporate entities, or for that matter, even if it's a tax audit engagement, the firms should ensure that all these aspects are properly there and the presentation is proper in all regards. Moving ahead, this was in relation to QRP. I'm skipping this because we have dealt with. Yes, one aspect we need to understand is as regard the peer review process is concerned, there are three reports. The main report, Annexure 1 and Annexure 2 reports are there, which the reviewer gives at the time of completion of his report. And then it is followed by Annexure 3 in case AQM is applicable thereof. Now, why I'm drawing a reference to this report is because as a reviewer and as well as a PU, we need to understand why this topic itself of documentation is relevant for our discussion today. Okay. Yes, we understand that the firm has to establish that those standards on auditing have been complied with, and documentation is only the part through which they are able to demonstrate. Vis-a-vis, let me tell you, in case of the reviewer's report, Annexure 2 is there, which deals largely with the standards on auditing requirements, and those documents uh, being part of the samples so selected by the reviewer, whichever sample he is selecting, suppose that is a case of statutory audit or tax audit, based on the review of those audit files, the reviewer has to report in Annexure 2 on an overall basis whether compliance of the aspects of standards on auditing has taken place vis-a-vis with respect to audit planning, risk assessment, materiality, sampling procedures, SA 600, then whether internal audit was applicable, then whether the report of internal audit has been considered. Vis-a-vis all this kind of thing, we have tried to map it in a summarized form over here. But please understand, it is not only the prerogative of the PU to establish that they have this reports on record, these documents on record to prove compliance with essays. However, the reviewer is also required to report. I'm just opening the report. Also report that whether he has seen the same and whether those are proper in nature. Suppose I'll just point out whether checklist manual used is updated on a timely basis. So we need to understand the firm should be able to demonstrate, yes, checklist manuals are there, and in what manner has those been updated. Those should also be documented. Engagement documentation, again, it is also asking whether engagement let MR the firm is having policies for sending engagement letters. These are very crucial in nature, and these are the responses of the reviewer and not the firm. So please understand it. The reviewer will also have to mandatorily verify the documents, and based on the verification of document, he will have to report whether the firm is issuing MRLs, whether the firm is issuing engagement letter. These are all forming part of Annexure 2. Whether in question number 2 also it is asking whether engagement documents are being issued or not. That is engagement letter in this regard. And please be very categorical about this, whether the file contains audit strategy. All these things are aptly given in the manual number 1 of the peer review manual given by the peer review board. All these aspects are covered therein. We should take a look at those, and the PU as well as the reviewer should understand that these are one of the reporting requirements, and it cannot be alienated or said that these are generic in nature and this can be done away with. No, it cannot be done away with, because there are specific questions being asked to the reviewer and he has to see and reply. So whether he has to also see whether the PU has demonstrated an understanding of the control activities, and to assess the risk of material misstatement in relation to SA 315, 300, and all those aspects. So please understand again, and how have the PU documented the risk. 315 documents. Now I was telling that I will not be going in detail to Annexure 2, but I was trying to just give an insight why this topic was selected. This topic is not only relevant from the on the risk of being repetitive for the PU, but as well as the reviewers, and they need to understand that if there are no proper documents being maintained by the practice unit, then the reporting of the reviewer will also be have to be made in a likewise manner. Okay. So coming to the definition of audit documentation, it is a record of audit procedures performed. It is relevant audit evidence obtained and conclusions reached by the auditor. These are also known as working paper or working paper documentations. And audit file is one or more folders or documents in a storage media, whether in physical form or electronic form, containing records of the audit documentation. Now, let me tell you, audit documentations are mandatory in nature. It cannot be said that this entity is an SMC entity or the auditor is a small auditor SMP firm. Likewise, they will not be required to maintain audit working papers. Well, that is a wrong thing. The audit working papers, the audit documentations has a direct bearing on our opinion being issued. And this cannot be said that we have not documented. Audit, it is a golden rule said that audit papers not documented means audit not done. However, the institute is aware and the regulators are aware that there needs to be a difference between the working papers requirement in terms of an entity doing SMP practice or entity being larger entity as compared to a client or an engagement wherein the scopes and the works is limited in nature. And that is why I'll just come to that. The nature, timing, and extent of the working papers is dependent upon the size of the firm vis-a-vis the size of the client's operations in this regard. And we have to understand that the exhaustiveness of the working paper cannot be said to be equal for all nature of assignments. It can vary from one engagement to another engagement. However, the basic element should be there. The primary aim of this audit documentation is to ensure that the it acts as an evidence for auditors basis for conclusion about the achievement of the overall objective of the audit, and also the documentation acts as evidence that the audit was planned and performed in accordance with the essays. So it is not only a matter of regulatory requirement that yes, as an auditor I need to document the same. Please understand, this documentation is helping. These are the working papers are actually meant to help the auditor to save them In case there are any issues being found later on or any questions being put to the auditor, that audit was not performed in a proper manner. But it actually helps in establishing that yes, the audit was done in such and such manner, and such were procedures were performed by the auditor in accordance with the standards of audit. Vis-a-vis the aspects wherein the evidences obtained by the auditor and in what manner those procedures were conducted to reach to the conclusion and the opinion being framed by the auditor. Okay. And it should also be understood that audit documentation is not only for the purpose of the auditor, but it can be said to be one such document wherein an experienced auditor, not having previous association with that engagement, is able to understand what were the procedures carried out by the firm, in what manner those procedures were linked to the evidences so obtained, and in what manner those opinion was framed. That is given the definitions. I'm not getting into detail, but just a reference thereof. And in simple parlance, it can be said that the audit documentation supports the auditor's basis for conclusion. It assists supervision by the engagement partner and the manager. It facilitates better understandings and help avoid misconception, enable quality control review and inspections, results in better conceptual clarity and clarity of thoughts and expression. One more aspect we need to understand that the retention of audit documentation is a very critical element. As far as SQC is concerned, SQC says that the firm needs to establish policies and procedures for timely completion of assembly of audit file and its retention thereof. If it is not prescribed under law, then the assembly should be completed within 60 days of the audit, and the retention in specific case should not be for less than 7 years. Now, let me tell you, it is very important to understand the assembly. It is the documentation should be prepared during the course of audit, and it should not be or it cannot be prepared after the date of audit report. We should understand that the 60 days timeline given under the SQC is only for the aspect of compilation. Suppose I'm having an audit team member of 5 members. Some documents are lying in the computer of one of the articles, while the others are lying in the server, and there might be some other physical documentations might be lying in the drawer of another article. Although those have been reviewed by the partner in all cases before issuing the audit report, however, the proper tagging thereof or certain completion formalities or certain checks and signing by the partner might have been missed. So this assembly period of 60 days is for all those documents to be put in one place and compiled all together. However, it should be ensured that there is no additional working paper being prepared by the firm in all regards. And this document should be preserved at least for a period of 7 years from the date of audit report in all cases, until unless the regulations provides otherwise or any law mandates otherwise. And again, the nature, timing, and extent of audit documentations will depend from entity to entity, and the document should be able to demonstrate that who has done the work, what was this document all about, and in what manner has this evidences so obtained, what were the testing procedures so conducted. See, why I'm dealing with this is because there are sessions which you might come across ki yes, these are the documents to be prepared in relation to uh, compliance of SA 240. These are the documents required to be prepared in terms of SA 505. There are lists are there, which we will be also sharing. However, the emphasis of this entire webinar was to demonstrate that what is the exact requirement of SA 230 all about, and what is the generic documentation which sometimes the members are preparing and which is failing the test of being called a proper working paper document. That is why we are dealing with this in detail. Again, let me tell you, the working paper should also be able to demonstrate in case there are any significant matters noted by the firm, then those working papers should be able to clearly speak out that these are the significant matters being observed, and on what basis what things were checked. So suppose if there was sampling been conducted, so what were the vouchers, the voucher numbers, the dates and amounts each tested. so that it can be traced properly that these were the things tested, and or these were the evidences obtained from the clients which were corroborated with the testing done by the entity, done by the auditor, and this were the conclusions reached, and whether there is another kind of sampling required to be undertaken, or so on and so forth. Furthermore, there should be a proper tagging of who has prepared the document, who has reviewed the document. It should be properly signed and dated. And it's not applicable for one document, but for each and every kind of documents. Proper client name, year, and all those should be stated. File reference numbers and everything. Now, the working paper should have proper clarity, because seeing the working papers, one is able to understand that yes, who has prepared the same, and likewise it should be logically arranged in a manner and properly indexed there too. It should be kept in a safe manner and should be retrievable at all times. Now, yes, this is one slide where certain illustrative basis, certain important working papers are being displayed over here for discussion. So one of those elements are, we need to understand that there's a concept of permanent file as well as current file. Permanent files are those standing documentations which are of more importance in nature, because it is not only related to 1 year, but it can be applicable for more than 1 year, which can be referenced to during subsequent years of audit also. Vis-a-vis current file is more or less related to engagement period for 1 year. So in that balance, if I say the documentation requirement in terms of permanent files is engagement letter, appointment letters, the independence declarations. Now this independence declaration may form file part of a permanent file as vis-a-vis current file, as the case may be. Now, independence declaration in terms of SQC, there's also an overachieving feature which says on an overall basis, the engagement letter, the independence letter should be taken. However, additionally, on an engagement-wise basis, if the independence declarations can also be taken from all the team members to establish further procedures. Yes, independence were duly checked at the time of audit team formation also, and there were no hiccups in this regard. Okay, then the sampling aspects, the materiality aspects, and all those cases should also be there. MRS should be there. Then the external confirmations, minutes of meeting, vis-a-vis, all this should be there. Furthermore, the checklist in terms of essays, the checklist in terms of Ind AS, the checklist in terms of SQC. Now, let me tell you, this checklist, having those checklists and just filling it up as yes or no will not serve the purpose. There are instances which has been observed that although a lot of standards on auditing, a lot of AS were not applicable to the entity per se. However, in the audit file, it was observed that those have been marked as no or yes applicable. However, no such additional procedure were conducted. And it was later observed that those were just done on a tick basis by one of the articles and were not reviewed properly. So it should be ensured that those checklists are not done for the purpose of mere formality. Those are integral part which helps in establishing that yes, whether this standards on auditing, whether this AS or Ind AS as the case may be is applicable, and whether those properly disclosures have been made in this regard, and those should also be tagged with the underlying working papers. The underlying working papers which we are talking about should also be tagged to the checklist in this regards to establish as yes, those checklists are acting as a safeguard in establishing that whether this AS, SS, and all those are being properly adhered to. Now, discrepancies were also noticed in case of SA 240, wherein the firms have failed to document the fraud risk questionnaire, the fraud risk meeting taking place. And it is very much important to understand that fraud risk element cannot be negated. Although as an auditor, we are not responsible to conduct an investigation. However, we should be exercising professional skepticism and in all matters, and the proper risk assessment should be done. And this fraud risk questionnaire cannot be eliminated by us, and we should have proper documents in support that yes, we have thoroughly tried to verify the same, and proper discussions have taken place with the management. And in those regards, there are certain checklists prescribed by ICA, which if followed will help us in establishing that yes, fraud risk questionnaire was duly sent, those were duly documented, and this procedure has been complied with. I'll be dealing with this checklist on it later. Yes, this is one of the formats suggested by ICA, wherein it should have the client name, the preparer name, the partner name, the period, the procedures performed, the observations in this regard, and the conclusions to reach. And it should be cross-linked with the trial balance risk register as the case may be, or other working papers in this regard. The indexing of the working papers is a very pivotal thing sometimes which we are forgetting, and sometimes it was also seen that those working papers were not signed properly, or there were stale working papers being fixed to along with the proper in the audit file, which kind of created a confusion. So it should be ensured that only proper and complete documents are tagged with the working papers. 60 days time I have already. Retention of working paper. Now let me tell you, this retention of working paper as well as the ownership of the audit documentation as far as the para 85 of SQC1 is concerned, it says that the same should be retained in all manner by the audit firm, and it is the property of the audit firm. It should be understood by the reviewer as well as the audit firm that even if they say that some of the partners have left or they are not in contact, the requirement of SQC says that the audit documentation is the property of the firm per se, and it cannot be alienated that those are not in the records of the firm. And it should also be understood that those should be properly secured and retained at least for a period of 7 years. Just a second. Yes. Again, the nature, timing, and extent. The working papers play a crucial role, and this is dependent on the timing extent. Now, suppose I tell you I am doing an audit, a tax audit of an entity having a turnover of 5 crore rupees. Okay. And then I say I am doing an audit of a listed entity. You will acknowledge the fact that the nature, time, and extent of my audit procedures, suppose for revenue recognition, all those aspects for the sales checking, for a listed entity as having turnover of suppose say 600 crores will definitely be higher, and the risk element will be definitely be higher than that of a tax audit wherein having 5 crores. So likewise, the procedures so performed by me will also be dependent on those factors. So the working paper aspects has to be dealt in a manner that for smaller audits, the working paper need not be very exhaustive, but they should be able to practically demonstrate the procedures so conducted, considering the nature and timing and extent of audit procedures to perform for such kind of audit. Furthermore, it has been sometimes observed that mere one-liners or two-liner observations are made by the auditors in their working paper, and they are saying it to be a working paper, which is not the case. Suppose a case of bank reconciliation statement uh, or bank statement. Suppose I am trying to verify my bank statement of the client with the books of accounts produced before me during the course of audit. And I have already obtained the same on an independent basis from the bank. That is okay. However, if I say that I just check the same with the books and take it off, that will not serve the purpose. Or even if I write verified and found correct, I will have to ensure that with which figure I have verified the same, who have verified the same, and if found correct or not. So it should just mere writing verified and found correct should not be done. Verified with what was the figure so I found, and then taking off will serve the purpose rather than just mentioning found correct. So we need to understand this. And it should also be understood that just merely obtaining documents from the client and stating it to be a working paper on an audit evidence will not serve the purpose. The audit procedures should be performed there too. And as an auditor, we need uh, to ensure that we are able to demonstrate the procedures being conducted by us on those documents obtained from the client. Only if we are able to demonstrate the procedures what we have conducted on those documents obtained from the client, only in those cases we can say audit has been done. Merely obtaining documents directly from the client and not being able to demonstrate that what are the procedures conducted, we cannot say those are audit evidences, or we cannot cross-link it with the audit working paper in this regard. That is one of the areas in which a lot of firms are facing issues. That is why please understand, having those documentations on record, those are coming from the client. We need to establish that those are emanating from the client, and the procedures what we have to conducted has to be properly documented by us. Now, coming to on an essay-wise basis, I'll come to those requirements there too. On an essay-wise basis, what are the on a generic nature? What is the requirement as per the documentation for each and every essay? If we go through essay 210 again, on the risk of being repetitive, it is engagement letter. Those should be obtained. One more aspect we need to understand this: the engagement letter should be signed properly by the firm issued to the client. Vis-a-vis, we should ensure that the terms of engagement have been properly signed, cross-signed by the client, and who has an authority thereof. So sometimes, if we say that in case of a company, it has been signed by the accountant or the head of the accounts department, that might not serve the purpose. Either it should be signed by one of the person authorized by the board, either on the directors or the CFO. In this case, we need to understand that, and that is why there are cases which has been observed that those engagement letter, even though obtained from the client, but were not signed by proper authority, and those were found to be deficient in this regard. So there are other case laws also in this regard. So as far as SA 210 is concerned, it also entrusts that the auditor should ensure that those have been properly signed by person in authority and having responsibility and authority to sign the same. Vis-a-vis, SA 220 is all about quality control with respect to the auditing. It is linked to SQC in all respects there too. However, we should ensure that in case of audit of a listed entity, as far as SQC is concerned, paragraph 60 mandates that EQCR is mandatory in nature. Vis-a-vis, paragraph 60B and 60C of SQC also states that even if it's not an audit of listed entity, but the practice unit should ensure to have certain criteria for mandatory EQCR for other nature of assignments. So during the course of review, a reviewer should mandatorily go through the EQCR criteria set in by the firms. There have been instances where it has been observed that the firm is saying, since we do not have any listed entity audit, hence EQCR is not applicable. Well, that is partially correct, because the SQC manual and procedure should also mandatorily establish the criteria for non-listed entities also, whose audit the entity is conducting, and it cannot be rubbed off saying that it's non-listed, so it is not applicable. Well, it might be applicable subject to the criteria being laid down by the entity. Over here, again, a parallel reference is drawn to the part B5 of the questionnaire of peer review. I'm coming to part B5 of the questionnaire of the peer review, wherein under the engagement performance questionnaire, part B5 of the questionnaire, form 1 questionnaire, question number 17 is speaking about whether the firm is having policies and procedures in relation to EQCR for listed entities. Vis-a-vis, question number 18 of part B5 of that form 1 is speaking about the criteria which the firm has laid for non-listed entities. And it has sometimes been seen that the firm is writing NA or nil, or sometimes on the other hand, the firm is writing applicable for all audits, which cannot be the case. So this should actually emanate properly from the SQC policies of the firm, and the reviewer should ensure that these are properly reported in the manner as written or mentioned in the SQC policy. Coming to audit strategy, we have already dealt with that. One of the elements of non-compliance is noted in case of SQC for SA 300 where, sorry, in terms of SA 300 where not documenting the audit strategy or planning document. However, it be noted that for entities which are SMP, which are small in nature, the scale is small in nature, they need not have an exhaustive audit plan, or in fact, the audit strategy document can also be merged with the audit plan document itself. However, the said entity or the auditor cannot take a leeway saying that audit plan is not applicable. It is very much applicable. However, the planned procedures depending on the risk factors being applicable and the audit team size, the planned procedures can be small in nature. However, the assurance element stays over there. There is no such aspect which the auditor can say that true and fair aspect is diluted there too, because those risk always stays there, and that is why those audit planning documents is a mandate. However, the extent of those can be different from that of an entity having large operations, and this is also pointed out in terms of the implementation guide to SA 230. So, as an auditor, we also should ensure that apart from referring to those standards on auditing which we are having, there are various implementation guides issued by ICF from time to time. And AASB has taken lead in this regard for this implementation guide to SA 230. We should be definitely referring those. In a lot of slides, I have also given references there too of the checklist or the implementation guide there too. Now, SA 240. I'll take the help of this. So this slide's talking about the auditor should ensure that there is a discussion initially amongst the team members of the fraud risk factors which might be present in the entity. And then he should draft his questionnaire and should send an inquiry to the management in a proper checklist or a questionnaire format. And once after the same, the responses are received from the entity, there should also be an interaction between the auditor with the management in this regard, and this cannot be alienated to the fact that over the call I have done that and that is done and dusted. It should be properly documented. Please understand that it is an element of fraud, and if there is any fraud being identified by the in the entity, then the element of audit procedures or the aspect of audit procedure is enlarged, vis-a-vis there are additional reporting requirements under section 143(12) of the Companies Act, which may be applicable as vis-a-vis if there are other regulators, then the reporting also has to be required. So it cannot be said that fraud risk factors SA 240 can be ignored thereof. The auditor should ensure those are properly done. Likewise, apart from those management inquiries and those checklists being done, the journal entries being tested and those aspects there too, because you need to understand us, we also need to establish that we cannot 100% rely on the client references, clients representation in any manner. We also have to have certain additional evidences emanating from the client documentations, clients records, clients accounting entries, so as to be able to have an assurance that those elements of risk in relation to fraud are not present. So this can be done by checking the internal quality aspects, internal control policies and the gaps if there are any regarding management override, and if there are any overrides thereof, what are the impact thereof in vis-a-vis, likewise whether there are any unusual related party transactions, whether not properly recorded, not properly disclosed, or whether not properly authorized, and in this manner those can be okay. So we need to understand that it should not be a tick mark approach, and this is one of the areas in which sometimes the auditor are failing to establish that they have done the same. There is also an audit summary memorandum document given under implementation guide to SQC, which is nothing but a snapshot or a summary of the entire audit gamut procedures being conducted, starting from the audit planning stage, references thereof, when was it started, who are the team members, when was the audit planned, in what were the significant risk identified, then what kind of sampling methods were adopted, the references and the summary of the misstatements identified, the materiality nature, in this case, the materiality thresholds being identified. The in this regard, those document summaries also there. If time permits, I'll also go through those templates if that is. But those templates are very much available in implementation guide to SQC. Round about 10 to 12 pages, this document is there. And if those are documented properly, this will help us in establishing a proper overview or the of the entire audit procedure in this regard, in addition to the generic requirements of other essays, what working papers we are required to maintain. Now, this is a very important slide. We need to understand that there is a difference between audit evidence and audit documentation to a extent. That is what I was referring in my earlier deliberation also. So audit evidence can be invoice, ledger, confirmation, agreement, bank statement, physical count sheet, as the case may be, that is generally obtained from client premises during the course of our audit. But audit documentation can be said, or working papers can be said, once we are able to establish what are the procedures performed, in what manner have these procedures been performed, what were the outcome of these procedures, what were the conclusions reached there. So we need to be able to demonstrate, yes, this were the evidences obtained, and it can be only be said to be an evidence only if we are able to demonstrate, yes, the procedures have been properly followed by us. Because our opinion is totally dependent upon the audit evidences so obtained by following the standards on auditing. We cannot uh, go away with the factor that we have obtained certain evidences, but we have not performed any audit procedures and we have just relied upon the documents given by the client. If we say that, then we are not in compliance with the standards on auditing. Okay. Coming to the certain aspects of documentation requirements with SQC, although then in subsequent slides, again, I'll go in deep with other essays also, but still, as regard the leadership requirements are concerned, there are six limbs of SQC: leadership requirements, client acceptance, engagement performance, monitoring, HR, and ethical requirements. In leadership requirements, first and foremost, we should understand on an overachieving basis, the SQC manual should be there. If possible, there should be, if in case of partnership firm, there should be a partner minutes documents wherein they properly noted down that so and so person is assigned as the QC partner or the managing partner, so as to establish that he is responsible for all those aspects there too. In ethical requirement aspect, first and foremost, those client, not the client, but the independence declarations on an overachieving feature on an annual basis should be obtained. And in case there are any conflicts or threats to independence, in what manner have those threats been tackled, that should be documented. And that is what the ethical requirements is speaking all about. That can be on an engagement basis also, if we are having obtaining independence declarations also. And if later on stage, during the course of audit, it is found that there are certain threats to independence, then at least for that, those threats, how those have been identified and reported, those should also be documented in the audit file. Vis-a-vis, a generic file has to be maintained if, on an annual basis, that those things have cropped up and in what manner those have been addressed to. Then client acceptance and continuations, the client KYC documentation, all those. And this checklist is of paramount importance, and it should be done and properly signed by the competent person, either it be the managing partner or the engagement partner. Before accepting of the client, this procedures of client acceptance and continuation should duly be followed. And even after the client is accepted, at least on a regular basis, say annually or biannually basis, those continuation checks have to be implemented before continuing with the client in this regard. Again, coming to the human resources aspect, the CP hour requirements, the training policy requirements, the training schedules thereof, then whether the manner in which the performance appraisals are taking place, vis-a-vis each and all these aspects also, the reviewer has to undertake. Engagement performance, all about the standards auditing aspects which we are dealing with. Again, we'll come to that. Monitoring is one such aspect, is wherein the firm are again failing to establish that yes, they have conducted certain internal inspections within the firm to establish that proper monitoring of the SQC policies are taking place. And if they are also failing to establish what were the samples being selected for inspection by the firm and who have done those internal inspection aspects there too. The firm should establish procedures and should document that these were the engagements selected for internal review and this were the findings thereof. And this and it should also ensure that those communications to the partners, if any, in relation to deficiencies so observed with non-compliance with SQC or any other standards on auditing, or as the case may be for any other policies or procedures of the firm, then this should also be communicated and documented that yes, this was communicated in so and so person, and this was the response of the said person. Okay. Just a minute. Coming to S315 once again, as regard the identification of risk, these are certain slides wherein common non-compliances aspects have been noted by NFRA or QRB or PRB in nature, wherein even they say, even if I'm having documents with me, working papers with me, and if suppose for revenue risk it is stated at high risk or medium risk, then those aspects will not be sufficient enough to be called as a working paper in proper manner, because the risk assessment procedures read with the internal control aspect should be able to be linked with the various assertions there too, whether it is completeness checks are there done or not, whether proper cutoff checks are done or not, and then be linked to the proper risk category. So not only those high risk or medium risk should be asserted, but before that, the assertions in those internal control aspects has to be also checked too, and we need to map it in that reference. So in this case, please understand that these are the areas sometimes the firm is unable to understand that why this document was not deemed to be a proper risk assessment document. So this can be one of the areas in which they might be failing to understand. And it should also be understood that this risk assessment is an ongoing process, and it should be properly signed. It should be done initial basis also, and it should be this document should be properly prepared and signed by the engagement partner at all times. Even before signing of the audit report, he should ensure that proper signing of has been done, and it cannot be said that he has seen that on an overall basis, but it should be able to demonstrate that yes, he has reviewed the same. And it should be also understood that if there are any significant risks identified, then those documents are to be linked with SA 330, which says auditor's response to assess risk. Okay. So whatever risk the auditor is identifying in this, which are significant in nature, or to him, he finds that these are more important in nature, the auditor is mandatorily required to plan his procedures in a manner that he is able to substantiate that yes, through this procedures I will be able to obtain an understanding of the entity and its environment, that yes, those controls are in place to alienate or eliminate this risk to a greater extent, and yes, this will not be a pervasive in nature, and there will be no material misstatements in the financial statements per se. So if I say in simple parlance, if I say, if it is found that there is significant risk in relation to revenue items, or say investment items which the auditor has, or his team has identified, then in SA2 330 documents, he will map it out. These are the areas of high risk. These are the planned procedures, that proper cutoff procedures I have to check, that I have to map it with GST documents and all those. The sampling requirements are more in this regard. He will have to list those important uh, areas of procedures which he's planning addressed to those risks. And it is a document wherein we sometimes fail to understand that SA 315 and 330 is totally linked. There are cases wherein it has been identified that 315 is identifying certain other elements as major risk. However, SA 330 documentation के अंदर में there were other items being identified as major risk, and the procedures were not linked in a correct manner. That led to our conclusion that those risk identification procedure and audit procedures are not proper. So, yes, and the procedure for risk assessment is in a manner that one should understand the entity. That is what SA 315 says. Understand the internal control procedures of the client. Have a team discussion among the engagement team. We can document the same. And the risks to identify the classes of transaction, the balances thereof, also considering the fraud risk element, we should ascertain on an the various assertions there too which are there. We should arrive at the risk metrics in this regard. And let me also tell you, please prepare this on a standalone basis. Do not directly rely on the internal control RCM prepared by the client. That is their internal documents prepared by them. This risk assessment documentation has to be prepared by the auditor and the team in this regard. They cannot just simply say that we have borrowed those risk assessment templates and matrices from the client itself, and those are forming part of our working paper document. This is one of the areas wherein a lot of places the auditors have failed to establish that they have been able to determine the risk properly. So please understand that this is one of such areas. I'm skipping this assertion level thing. Yes. Now coming to the materiality. In this case, again, as I already told earlier, we should ensure that it must be, there must be ensured that this is done at a planning stage itself, and it should not be seen that this was done just for the case of documentation, because it can easily be identified. Please see that the materiality aspects plays a pivotal role in our sampling requirement vis-a-vis the overall audit opinion is dependent on the same, because as an auditor we are saying that on the basis of the documents examined by us and the audit procedures conducted and the audit evidences obtained by us, we are of the opinion that the financial statements give a true and fair view and it is not materially misstated. Now there are three things. It is one of the things that we are saying it gives a true and fair view. It is a true and fair view because the financial statements are not materially misstated. That means there might be misstatements, but that is not material in nature. That is why we are of the opinion that there is the materiality is there. There is no sorry that since there is no material misstatement, that is why the financial statements give a true and fair view. Now, sometimes or in many cases, it is observed that if the regulators are asking, or even if the peer reviewer is asking, that this document should be mandatorily there with you in your audit working papers, the firms are unable to give the documents or the basis for which or the benchmarks which derive those materiality figures. So merely stating that 5% of the PBT, as I said earlier, was the benchmark being for the materiality and all those aspects will not serve the purpose, because as an auditor we need to understand that why such and such benchmark was selected, what was the overall materiality aspects there too, we have to undertake that. And for this we can refer to the ICI Center for Audit Quality Directorate template, which is an excellent document which will help us in establishing that yes, we are able to demonstrate the calculation of materiality in this regard. Suppose for the aspect of the benchmark can be in case of turnover, and suppose as per the risk assessment procedure the risk element is supposed to be high, then the materiality as far as the ICI template is concerned should be between 0.5 to 0.7% of the turnover. Or if suppose say the benchmark selected by the auditor is a NAV or the total asset aspect, then if the risk is deemed to be high, then it should be within 1% to 1.3%. However, it should be understood that it is just this percentages are recommendatory in nature. The auditor is free to change this materiality threshold criteria. However, in all cases, the reason for selecting such benchmark, either it be turnover or PBT or in fact total shareholders capital as the case may be, he should be able to demonstrate or he should mandatorily write why this benchmark has been selected and based on which risk criteria has been this percentage has been selected. That, and over here also uh, uh, again what is the overall materiality and performance materiality being identified, because suppose if those there are no materiality documentation in place, then how can the auditor establish that yes, the corrected there are corrected misstatements or there are misstatements which are not material in nature? Until unless I am able to identify the materiality threshold, I cannot categorize that material or non-material. There might be misstatements, that is for sure. That uh, each and every kind of entity might be having several kind of misstatements, but the materiality threshold until unless determined will not help me in arriving at the proper conclusions of the true and fair view. Okay. One more aspect in this materiality, let me tell you, friends, is the understanding of the corrected misstatements and uncorrected misstatements. So misstatements can be of not only in terms of the amount, but the standards on auditing also says 450 also says that it can be in the presentation, it can be in amount, it can be in classification, and it can be in disclosure terms. We call it the PACD approach to the misstatements. So need not be it cannot be said that it is always quantifiable. It can be also the case wherein incorrect misclassification has taken place. So the materiality sometimes although we calculate materiality aspects in terms of the quantitative aspects, but we should also understand that SA 450 talking about the evaluation of misstatements on an overall basis, and those should be kept in mind. And this materiality thresholds that helps us in determining the overall aspect there too. Coming to SA 505 external confirmations, although I have already dealt with in earlier slides, but let me tell you Sometimes the auditor are failing to maintain the control register that to whom those confirmation requests have been sent, the date in which it was sent, whether responses have been received by them or not, and if not received, whether follow-up actions were taken by them or the follow-up reminders were taken by them. And in case no response have been received, then what was the alternate procedure carried on by the auditor? Now, this is of the aspect in which someone might say that the alternate procedures is not directly linked to the external confirmation process. However, please understand that in case those responses are not received, then the auditor will mandatorily have to go about doing alternate procedure so as to be able to establish that yes, those figures are correct in nature and there are no misstatements in this regard. And for that matter, he might do certain alternate procedures which he will have to properly document that these are the procedures which I have tried to do because of the non-receipt of confirmations in this regard. And that is also stated in SA 505, and implementation guide is also there, which helps us in determining certain alternate procedures which the auditor is able to do. And over here, please understand that the auditor should be able to demonstrate that those responses have been sought directly by him and not by the client in any manner. Because if he loses the control over the confirmation itself, the entire SA 505 is said to be non-compliant, even if those figures are matching. That is irrespective of the fact whether it is matching or not, because it is a third-party documentation obtained on an independent basis, which gives more clarity, authenticity, and evidential value to the external confirmation rather than those documents being coming through the client. The client might just be acting as a postal authority in this regard, but even as per the standards is concerned, we should be aware that it should be obtained independently in all manners whatsoever. Even if we for bank confirmations also, we should ensure that. And for this aspects, there are proper formats given by ICAI, even for bank confirmation procedures or even for this vendor confirmations procedure, those confirmation checklist formats are also available within the standard working paper templates. Related party. Now, friends, let me tell you, I'll just move to one aspect of the financial statement disclosure. Sometimes it is seen that in the financial statement schedule 3, it is under the disclosure of related party transactions in terms of the requirement of the schedule 3 vis-a-vis AS or NDS as the case may be. It is written that related party identified by the management and relied upon by the auditors. Now, let me tell you, if this kind of lines are stated in the financial statement, it gives a clear cut indications that the audit procedures in terms of related party identification and the aspects thereto have not been complied by the auditor. As far as this is concerned, it is a practical aspect. We understand that yes, initially the related party list is provided by the client. Thereafter, the auditor is required to do additional procedures to be able to identify whether there are any clients which whether there are any entities which might be potential related party which the auditor has which the client has not reported to the auditor, vis-a-vis that be the case. But if in the financial statement itself it is written that the related party has been the list has been supplied by the client and directly relied upon by the auditor, it is a clear-cut violation of the requirements of standards in auditing, which mandates that even if those lists have been given by the client or even if those have been ascertained in those manner, the auditor is mandatorily required to undertake a lot of exercises in this regards to understand whether all those related parties have been identified, whether proper disclosures in this regard have been made. And it is if it is said that he's just merely relying on those client representations, then SA 505 is violated. One more thing is that we need to understand that the auditor is not only relying on the client representations, he should be able to also check and demonstrate and also note it down in his working papers of the various board minutes being referred to during the course of his audit, and whether if there are any uh, approvals required in terms of the requirements of Companies Act for those related party transactions, whether those have been properly done or not, whether those are in arm length basis on a generic basis and not in terms and not prejudicial to the interest of the entity in this regard. and this should be properly documented, and it should be also seen that the auditor has taken steps in performing those procedure, and it should not be done that same as last year. Those one of the common aspects of errors in working papers in a lot of aspects were noticed that auditor are carry forwarding the last year's working paper, that is fine, but the same are repeated on as is basis without adding anything to the same aspect, whether it be for suppose in the case of audit programs it is a common aspect, or a fraud risk aspect, this is a common aspect being found, or in fact in case of this related party transactions also it was found that sometimes the earlier documentations are also being carry forwarded without properly seeing that whether there are any changes in the client's environment and all those things. So if there are any changes in KMP and all those things, also we should ensure that. That is why we should also have on record the MBP one and all those records with us, so that those helps in ascertaining whether there are any related party transactions or related parties which and also to corroborate the same with the list given by the client. Independent corroboration, as I already said, that is required. And we also need to ensure that in our working papers, we are matching each identified related party transactions to the disclosure in the financial statement, clause by clause. And we should ensure that those are in agreement with the AS 18 or Ind AS 24 requirement. Furthermore, we should also ensure that the disclosures given by the entity in the financial statements is holistic in nature, with all the transactions which have taken place during the year are properly recorded. The closing balances, if any, are properly recorded. The nature of such transactions are properly disclosed, as well as the nature of relationship of the client with that of the related parties also properly disclosed in this regard. And in case there is a requirement of CARO, then again we should ensure that those working papers are properly tagged there too with the response of the auditor in terms of the CARO requirements. Now coming to the aspect of SS700, but just let me tell you, I'll just switch over to one slide first, then I'll come to this aspect. Just a second. Yeah. So in contrast, if I tell you, I'll come to audit report once again, but in contrast, if I tell you the entire gamut of this audit working paper, which we are talking about, the audit documentation, which we are talking about, it is not for the purpose of saying that we should do it, but ICA is also has already taken a lot of proactive steps in order to help the auditors in determining the extent of the audit working papers required, as well as the samples of such working papers. So if as I was saying, that on the pre-engagement acceptance level, in terms of SA 210 read with the SQC requirement, we should ensure that we should have proper documentations to support the independence ethics evaluation or the client KYC documentation and engagement letter. And for that purpose, if I am referencing it to this AASB checklist, then we should have the note on appointment, the engagement acceptance checklist, which is given therein, the engagement letter given in this format, or rather, I'll suggest the engagement letter given by the CQ should be referred. Independence confirmations on an entity client specific engagement wise basis the format is also there in this documentation. Page number 7, if I refer to this page number, just a second. Yes, confidentiality and undertaking and independence formats for the audit team members. All these are given to us in PDF as well as ready to use Word formats, and which we should take help of this. We should establish and enhance the audit quality procedures in the case of our audit engagements, this confidentiality engagement. So I'll also share this file with the members so that they are able to understand that just having audit the requirement of standards in auditing are various in nature. we, by dint of this slide, what I'm trying to do is I've also tried to map a lot of those standards with vis-a-vis the practical working paper templates. So if I tell you the evaluation of independence as per 400, or the eligibility documentation in terms of auditors requirement of appointment is there, we are also having certain templates with us, which the AASB has given, which should be able to demonstrate that yes, these processes have been taken care of. Now, if we come to the risk assessment again on the risk of being repetitive, then those documentation in terms of the client KYC requirements are also mentioned therein. Then the fraud risk assessment templates and questionnaires has also been given. Risk assessment templates and the gaps being identified are also been given in those working paper requirements given by AASB. And there are audit strategy documents, audit planning documents, meeting minutes between the firm itself, or in fact the client meets as well as the engagement partner or the engagement team meeting minutes are also there in this various parts of this working paper documentation given by the AASB, which if followed in proper manner, which will help and try to establish. In fact, these formats are also having a lot of uh, audit programs in this regard for a lot of aspects, whether it be share capital or loans on borrowings in these cases, which we can refer to. In addition to that, one should also refer to the 2020 SMP Practitioners Guide, wherein those formats are also equally relevant for smaller firms, SMP firms in this regard, which instead of following this formats, they can also refer to those formats apart from this checklist in this regard. That is also available on the website of the CMP Benefits ICA. And if required, I can share the same. One can download the same. They can connect with me. I'll also share. Happy to share the same. Now coming to this materiality thresholds, again, SA 320, those materiality templates by CAQD can be of great help. Audit strategy documentation. Now please see that audit planning and materiality goes hand in hand. That is why this audit planning documentation and audit strategy document, if I say that materiality is prepared thereafter and then audit planning is done, will render the audit plan useless. So we need to understand that these are done in a proper manner so that proper documentations take place. Sometimes it is seen that audit strategy document and audit planning document was prepared suppose on 10th of April, and it was seen that the materiality documentation were prepared only on 17th of September, while the audit report was signed on 20th of September. So it was seen that materiality thresholds documentation and all those were not proper and not found to be done in a proper manner. So we need to understand that there are also a sequential manner in which those documents are to be prepared. And if prepared on a proper manner, then it helps us and eases us in complying with the various requirements of the documentation. It is not a mere formality which the audit team or the members are conducting, but those documents are acting as a shield. Again, on the risk of being repetitive, I say it's acting as a shield for the auditors that yes, these are the procedures being conducted on a qualitative aspects, and these are the evidences being tested by the firm to arrive at this opinion in this regard. Vis-a-vis the engagement team mobilization, now again, SQC was also harping upon the factor of this team budgeting, team mobilization. Again, the various testing strategies again need to be documented on a mandatory basis by the auditors. That is also the requirement of the SA, also the analytical process in all those cases has to be done. So what in what manner has this been identified? Those cases are also being dealt with various checklists by the AASB, whether it be 2.12 for testing strategy, whether it be 2.13 for preliminary analytical reviews thereof. Overall understanding of the internal control aspects, the control charts, and all those aspects. However, in this case, we need to understand that we should have narratives which cannot be given directly by ICI, but we should take records of the client documentations related to internal control, their policies, procedures, and then we should try to map it and uh, mention the procedures in this cases, the flowcharts in this case, and then if there are any shortcomings which identified, then we should properly document the same and also communicate those deficiencies so identified in the course of audit to the management and the TCWG. And this communication should also form part of our working papers in this regard. Okay. Yeah. Coming to now, yes, one of the aspect of this revenue recognition, all the aspect, there is a test of detail as well as substantive procedures need to be done. Test of controls as well as the test of details. Now, those alternate procedures and whatever we are talking about, whether the checking of these assertions and all those are also very important in nature. And this should also be properly tagged, referenced, and retained in our working papers. Sometimes it is seen that merely just checking the sales document, the sales invoices or the sales reports with the GST records, and we say that we are confident enough, and those documents are found to be proper and complete in all regards, and we are good to go. However, it will not serve the purpose of an or proper working paper document, because we need to ensure that what we have tested and which what we have verified and what were the conclusions reached have not been documented in this case. That is why properly all those aspects have to be documented, only to be said that this is a proper working paper. And yes, on the risk of being repetitive, again, there should be a maker checker concept, wherein it should be ensured that it is generally prepared by the audit team member and then reviewed by the partner, which helps in identifying any areas or aspects which the preparer might have missed in this regards. However, in case of smaller firms and the smaller engagement teams, it cannot be said that it is mandatory in nature, but given the nature, timing, and extent, and the risk covered in the assignment, this might depend on case to case basis. That is what is also harped upon in SA 230 implementation guide. Yeah, coming to this audit report aspect, then we'll go for the questions in this regard. We need to ensure that the requirement of SA 700 says that the auditor shall evaluate whether the financial statements are prepared in all material aspects in accordance with the requirement of applicable FRF. Now, very common aspect which I will try to highlight is, or the very common error, sometimes it is seen that under the significant accounting policies prepared by the company mentioned in the financial statements, sometimes it is seen that the accounting standards reference rules references which they are giving, sometimes instead of giving the company's accounting standard rules 2021 reference, they are giving the reference of the erstwhile 2006. That is a wrong concept. They need to understand that proper FRF has been reported in the client's financial statement. Otherwise, our report will also be impacted to a certain extent, and we need to ensure that those are in sync. So that is why sometimes it is seen that companies accounting standard rules 2006 is being mentioned, then we should ensure that the client is being updated and client is said that please correct the same. Otherwise, it will have a drastic impact on our reporting procedures, because in the audit report, we will say that it is in compliance with the accounting standards rules 2021. However, the company will keep on saying that it is in compliance with rules 2006, which will be a drastic change in this regard. Or sometimes even it is seen that in case of companies, although the accounting standard is prescribed and notified by the MCA, however, a lot of time it is seen that the significant accounting policies is the accounting standards issued by ICA, which is not should not be the case, because in this case again the applicable FRF and the applicable accounting standards has not been properly cross-referenced by the company, which should be properly rectified. And in what manner this can be rectified initial basis only, because if we see that during the course of our audit planning and understanding the entity, at the time of understanding the entity, those documents which we are trying to prepare, we also need to establish and record what is the applicable FRF to the entity, what are the prima facie applicable AS framework or India's framework is applicable to entity, and what are the laws and regulations which are applicable to entity. That is what SA 250 also says, that proper laws and regulations whichever are applicable to entity should be referred to. So if those documents are initially prepared in the course of audit, this kind of errors can easily be mapped, checked, and rectified then and there, rather than this being uh, kept undetected and then being a cause of concern to the entity as well as to the auditor in this regard. So please keep a note to that effect. And it is very well important to also understand, although the financial statements are prepared by the client and the responsibility of those disclosure of the client, however, it is also mandatory to understand that the auditor's role is also to evaluate whether the financial statement achieve the fair presentation, and that the overall presentation structure and content of the financial statements are proper in terms of the requirements of the Schedule 3, as the case, or as the case may be, other applicable financial reporting framework. So if it is seen that the proper presentations or disclosures are not made in the financial statements, the auditor cannot or should not take a leeway that it is the responsibility of the entity only. That is why, in case he is finding though there are non-compliances or there are non-disclosures or non-proper presentations are not made, this again qualifies to be a kind of misstatements, which I already discussed in SA 450 aspects, that presentation mismatches or disclosure mismatches or classification mismatches. Those misstatements or mismatches the auditor is duty bound to communicate to the client as a misstatement, and then he also has to mandatorily note it down whether those communications have been properly responded to by the client. If those have been rectified, then it will be treated as corrected misstatements, and if not corrected, then it will be treated as uncorrected misstatements. Again, SA 450 aspect come into the picture, wherein it says that evaluation of auditors' response to assess risk and misstatements in this regard. So in this case, we need to understand that if there are misstatements identified in the course of audit and duly communicated by the auditor to the client, and those have not been rectified, then the auditor needs to evaluate those misstatements, whether it is material enough or not. And for that purpose, he will have to mandatorily map it. And it is not a smaller exercise. He will have to have certain documents, certain checklists, and certain formats wherein he will map these are the kind of misstatements identified on this dates. I have intimated to the board or the client in this case, these are the corrected ones and these are the uncorrected ones. And in case wherever he is saying these are the uncorrected misstatements, he will have to mandatorily map it with the materiality levels, whether it be overall materiality or whether it be clearly trivial materiality or performance materiality. In generic, it is said to be done on a performance materiality level basis. However, it can also be other cases also because of the classes of balance or certain other disclosure need not be on a performance materiality basis, but for certain other line items, the materiality levels can also be different. However, those should be properly referred to and documented in the materiality templates or the materiality working paper. So please ensure that those kind of misstatements are properly addressed. And if it is seen that those misstatements, although uncorrected, are not material in nature, only then the auditor should opine that yes, the financial statements give a true and fair view. Because if there are material misstatements, and still, if the auditor is giving an opinion that it's given true and fair view, then the auditor will be liable for disciplinary action because his opinion will be incorrect in nature. So please understand that. That is why opinion paragraph states that the true and fair view is dependent on the materiality aspect there to which we are harping upon the same. True and state. Furthermore, it is seen that in the opinion paragraph, we need to understand that as far as SA 700 is concerned, the first line item or the first paragraph of our audit report, being the independent auditor's report, should clearly identify that whether it's a standalone financial statements or a consolidated financial statement. In case there are no consolidated financial statement, then the auditor can write that independent report on the auditor of financial statements. That is fine. However, it should be followed by the opinion paragraph mandatory basis, and thereafter the basis for opinion paragraph. Sometimes it is seen that the placement of those paragraphs are not proper in terms of SS 700, which is said to be non-compliant with the requirements of SS 700. Likewise, we also need to understand the components of the financial statement. Suppose there is an entity, and in this I am referring to an entity which is following the AS concept. And suppose there is an entity which is having uh, cash flow is also applicable to entity, and this is one of the excerpts from the audit report. We need to understand all those elements of the financial statements are properly reported in the opinion paragraph, so that whether it be balance sheet, statement of profit and loss, and cash flow, if forming part of the financial statement, should be stated along with a reference to the notes to accounts as the case may be. And in case there are returns or branches audited by other auditor and not the branch auditor, then the proper reference should be also given in the audit report by the auditor, which is also mandated in terms of the requirement of section 143.3 read with SA 700 requirements. Sometimes this is what the auditors are missing, wherein there are case of branch auditors and the branch audits being done by other auditor. However, the auditor are not reporting the same in the opinion paragraph, or even if they're referencing the same in the opinion paragraph, they are failing to mention the other matter paragraph, which is also mandatory required in terms of SA 706. इस चीज को बड़ी ध्यान से करना है. Likewise, in the opinion paragraph also, one should ensure that in terms of the requirement of paragraph number 824 of SA 700 read with paragraph 25B, the reference of this line should be mandatory there in case of companies audit reports, wherein we should mandatory write that the financial statements give the information required by the Companies Act in the manner so required, and give a true and fair view in conformity. Items stated in this blue line should mandatorily be stated therein in the audit report of companies, because if we are not writing this accounting standard under 133, then we are failing to highlight which FR is actually applicable to the company, and we are giving a generic response which might not hold good in the aspect of the company's audit, because 133 section 133 specifically mentions certain accounting standard applicable to the company. This is very pertinent to note that vis-a-vis we should also be able to properly demonstrate that yes, whether it's profit or loss, sometimes the auditors are missing the point and they are unable to properly highlight whether it is profit or loss, and they are just saying it is a clerical mistake and they have forgot to knock off either profit or loss as the case may be. We should understand that this opinion paragraph is the main deliverable of the audit report. If there are any inconsistencies found over here, the auditor cannot take the leeway or the pretext that it is a clerical error, and there might be disciplinary actions may also be initiated to him in this regard. So that is one of the area. And just one more aspect I'll try to deal with is, in case the opinion is modified, then the opinion paragraph will also change. Vis-a-vis the basis for opinion paragraph will also undergo changes in terms of the requirement of those essay, essay 705 read with 700. However, it should be ensured that though paragraphs are not misused by the auditors, or it should be properly reported. And then the case of just a second. The case of emphasis or matter, it is also seen sometimes or a lot of places, the auditors, instead of giving a qualified opinion, are referencing a lot of aspects thereto in the EOM paragraph rather than those aspects being reported as non-compliances directly and qualifying the same. Please understand that EOM paragraph is not at all a substitute for the opinion paragraph. It is only a paragraph which says that certain items which are appropriately presented or disclosed in the financial statement, but only for the purpose of highlighting the same to the users of paramount, which is of paramount importance as per the auditor, the same is highlighted. So in case there are any uncorrected misstatements or improper disclosures or no disclosures made in the financial statement at all, and the auditor feels like, suppose this is a qualification and let me not give a qualified report, or let me go and give a EOM and my responsibility is done away with, then that is a wrong concept. In EOM can only take place of matters which are presented in the financial statements, which is appropriately or correctly presented in the financial statement, and in the auditor's opinion, it is of fundamental importance to the user's understanding. गलत चीज को EOM में you cannot report it, or we cannot say that any qualifications reported in EOM will hold good. I have brought it to the notice of the management or the users in this regard. It is a wrong concept been used by the certain auditors, and there are cases which have been observed that these are going for disciplinary actions in this regard. So please keep a track of that. Well, due to paucity of time, I'll end my deliberations over here, and I'll be happy to take the queries in this regard. Ashish, I'll request you, if there are any queries in this regard, I'll request you to.
Good evening, sir. So there are a few queries which I would like to highlight.
Yeah. Just a second.
Hello, am I audible, sir?
Yes. Yes, sir. Yes, sir. Yes, sir.
So there was a query related to it, said as, after audit completion, for how many years audit working papers shall be kept by the auditor?
Sir, again, I repeat that as far as the SQC is concerned, the retention period says that, as far as the SQC said, that for at least 7 years, the audit working paper should be retained and should be properly secured in all respects, and there should be no tampering thereof with those working papers in at all. Yes, sir.
Thanks, sir. Next question is, usually we take balance confirmation which is not received till the date of audit, and auditors usually mention one line that it is subject to confirmation. So
Sure.
is it workable or not? Or what precautions shall we
Correct,
take
sir.
as an auditor?
Correct, sir. Yes, thanks for pointing this out. I forgot to mention this in my course of my deliberation. See, first and foremost, it is a common trend which has followed that those aspects, suppose I say that subject debtors balances, creditors balance are subject to confirmation. This, the entity is stating that in the notes to accounts. First and foremost, let me tell you, the notes to accounts is that of the entity. The disclosures are that of the management and not of the auditor in any case. Those are done by the entity. Okay. Even if the entities are saying that, please understand that it's of paramount importance to the auditors to have a understanding and confident that yes, those balances are proper in nature. And if those aspects are material in nature and those are subject to confirmations, and if the auditor is unable to obtain proper confirmations in this regard, then that aspect might be subject to qualification. Because if those are not material, then this should not be mentioned in the notes to accounts at all that these are subject to confirmation, because material aspects are there, that is all. But if those are material and still those confirmations are not received, merely stating that those balances are subject to confirmation will not hold good. Or for that matter, there are also cases which has been observed that the auditors are mentioning those subject balances are subject to confirmation under EUM rather than qualifying the same. The auditors are also referencing that as stated in note number so and so, the balances of certain balances of traders, debtors, creditors, or loans are subject to confirmation and they have been taken at value certified by the management. Well, again, since those are not properly done and those are material in nature, it should be qualified and they should not be taken the help of those notes to account, sir. ये common error होती है as an auditor.
So the next question is, if there is a firm of 4 partners and any one partner is signing the financials or the audit, whether the HO should keep the audit papers in that case, or that individual partner shall keep the audit reports?
Okay, sir. Well, a practical answer there too is, see, the firm's policies. The SQC says the documentation is that of the firm. Okay. The partner is also part of the firm in this regard. Okay. Well, you might be referring to the aspect wherein I said it should be mandatorily kept by the firm, and if the partner leaves the firm, then it should be mandatorily retained by the firm. So please understand that the generic policies of the firm will prevail. In practical parlance, what happens is those documents as per the policies is there. Either it be at the done at the branch or at the HO, it is generally retained by the engagement partner following the scope of those retention and storage requirements and those the policies whatever the firm is having. It is generally retained by the engagement partner in terms of the policies of the firm. However, if the policies of the HO is in such manner, the firm says that all those documents should be retained at one centralized place, retained by the HO, then the branch should follow that. Or if the policy is that it can be retained by the branch, then it should be there. However, proper procedures for safeguards and safety should be maintained. And in case there is any change in the engagement partner, or suppose he leaves the firm, then he should ensure that all those working papers signed on behalf of this firm, should be transferred to the requisite proper authority of the firm, because that is the authority of the firm in this regard. SQC says that it is the authority of the firm. However, in this case also, additionally, I'm just saying because it's a practical aspect there too. The engagement partner in this case can also take extracts or copies thereof of those working papers, because he was acting as a signing partner in this case. Because if he wants to, he can take it, but he cannot say that I will retain the originals, because it might be an issue thereafter. It's a practical case. We need to understand that. Yes.
Thank you, sir. So the next question is, what is NEFRA role in it? Can we explain with an example, if possible?
NEFRA role in the sense of audit engaged documents. So please see, NEFRA is playing an oversight role. Okay. And it is not coming directly as a committee of ICR or something. It is an external regulatory body established under the aegis of the Companies Act, wherein those persons from NEFRA are coming to the auditor's place and verifying their audit files, whether one file or two file or five files as the case may be. Annual inspections are taking place just to see whether the auditor has complied with those requirements of standards on auditing and all those cases. And in case those have not been done properly, they may be raising issues with ICA, as well as they may also be also initiating actions suo moto, because those their role, their powers have increased manifolds. And yes, we need to understand that God forbid if there is any NEFRA inspection to us, but we need to understand that it should not be taken in a negative aspect. But if the firm's policies and procedures are done in a proper manner, then we will be able to answer to those NEFRA queries also, or any other regulatory queries thereof. That was the main intention of our entire exercise also of this webinar also, that those working papers will speak itself of the procedures being conducted.
Thank you, sir. So our next question is there an alternate for retention of audit documentation for 7 years? Can we make it something different or some other alternate solution for it?
Well, sir, I couldn't comprehend the question entirely. The alternate for retention of audit. Let me tell you, retention. See, sometimes it so happens. So keeping physical files. See, we can also scan it and do the same. But we cannot say that those physical. We have scanned the files in entirety and those physical documents are discarded. It cannot be the case. However, it can also be kept securely in scanned version also. But the manner in which we are doing the same, it should be retained at least for 7 years in all respects altogether. It cannot be said that I have retained it for 5 years and that is done. The client ceases to be my existing client and I am okay with it. That should not be the case. SQC 1 mandates 7 साल के लिए आपको रखना है and it should be properly secured, and the documentation should either be in physical or the electronic media, however in their original form, and it should be properly retrieved there too. It should not be like there are also cases. Let me just highlight also. There were also cases wherein original working papers were in physical. Okay. Most of the evidences obtained were in physical. However, what did the firm did? The firm scanned the same, kept it on record. Okay. And within 1 year, they discarded the entire physical set of documents, stating that since I have archived the same, this is not required. However, additionally, they had not also embedded the aspect of archival of those documents. They had not ensured that proper security of if anyone is accessing the same, who has accessed the same, or if there is any modification made to those things, those were also not followed in this regard. So all these aspects are very pivotal in nature for retention and securing the working papers in this regard. We need to be aware of that. 7 साल के लिए minimum रखना है. And if I got the question correct, that was the thing. Alternate procedures और तो मेरे को समझ में आया नहीं sir. Sorry for that.
It was majorly about whether we can go for less than 7 years in some or the other way or no.
No sir, no sir, no sir. To my understanding, that is a requirement, sir. Minimum 7 years.
Thank you, sir. The next question is, as we understand that the scope of peer review is less than the quality review, will it make any difference so far as maintaining audit documentation is concerned?
First of all, sir, let me just add to it. I will disagree with the question itself that the scope of peer review is less than quality review. Or for that matter, I will just say that the scope of peer review is more than that of the quality review. Although the quality review is emphasizing on one particular engagement with all those aspects of the standards and auditing, quality control, as the case may be, whichever is applicable. The scope of peer review is on a more enhanced basis, and the scope is not only restricted to the technical, professional, ethical standard, but to a larger extent of the overall functioning of the entity in this case, and wherein that is why you can refer to the guidelines by peer review board, and the scope is enlarged there too. And the second part was that, just can you refer to that again? What was the second question?
If according to them, if the scope of peer review is quite less than quality review, will that make any difference so far as maintaining audit documentation is concerned?
So the thing is that the extent of audit documentation from assignment to assignment basis might differ. See, the main elements will remain the same, but the extent, मान लीजिए, there might be some documents wherein I might be keeping 5-pager document and that might be stated to be an exhaustive working paper, or there might be even a 5-line documents which I may say that is acting as my working paper for one of the assignments. That might be the case, but please understand that saying that for quality review I'm having certain other documentation, for peer review I'm having certain other documentation will not hold good, because this standards on auditing documentation is in generic in nature. Irrespective of who is the regulator in this regard, the requirement is on an overall basis, to the although dependent on the nature, timing and extent of the nature, timing and size of the entity, auditor as well as the auditee in this case. However, regulator कौन होता है उससे my audit documentation doesn't change. One more aspect which I like to point out this, please understand this SQC policy and documentations have already been prepared and retained by the auditor during the course of his audit. These are just the reviewer is coming and verifying आपने उस समय properly लिख के रखा या नहीं रखा, retain किया कि नहीं रखा. These are just being retrieved once again and the reviewer is checking the same. No documents, no working papers are being prepared by the auditor in any case, either it be peer review, it be quality review, or any reviews per se. So please understand that I cannot say for this documentation I will make it more aggressive. Yes, however, if those are listed entity criteria, okay, there might be certain additional requirements in terms of SEBI or something like that, which the auditor might enhance this working paper. That depends from the policies of the firm. But peer review के लिए अलग हो, quality review के लिए documentation का requirement अलग हो, not to my knowledge, sir.
Thank you, sir. So there are many more questions, but considering the limitations of time, I will put up the last question, which is, can we get a ready-made template to make ourselves ready for peer review, especially for the small enterprises documents where we have workings only in Excel? So what we shall be taking steps on a precautionary note or any template to make sure that we are doing proper peer review?
Well, on this aspect, let me tell you, sir, saying that each and every working paper in Excel will be a tedious task, first and foremost. Secondly, although there are templates given by AASB in Word, Excel, or something like that, which may be helpful, but saying that exhaustive working paper only to support this, giving certain 10 page or 15 page documents will be substantial, that might not be the case. Although you may refer to the various documentations and the templates given by the various committees of ICI, which is readily available on the website of peer review board also. The references that has also been given there too. That is the case, sir. So saying that कि ये 50 document मैं आपको बोल दूं कि will be enough. Although I also forgot to highlight one of the aspects that in AQM, if that is applicable, there are 230 points which is available to the firm, and you may also refer to that. There are exhaustive more than 30 or 40 templates which are mandatorily required to be made, implemented, and properly documented by the firm to establish that yes, they have complied with the same. Okay, but saying that कि वो 30-40 template ही मैं बना के रख लूं तो will be sufficient, cannot be said that in all regards, sir. But on an overall basis, yes, this might have at least 60-70% can be said that yes, that can be done. So SSB के templates or CAQ and all those peer review के templates are there, which is said to be done, and you can refer to this on an holistic basis. That can cover, sir.
Thank you, sir. Thank you very much. The questions are still pending considering the severity of the topic, but I'm sure it's time to call off. With this, I will express my heartfelt thanks to today's speaker, Amitesh Agrawal ji, a gratitude to the peer review board, chairman, sir, vice chairman, sir, and the whole technology committee, and at last to all the members who have been very patientfully attending and learning the session from the last 2 hours. Thank you, one. Thank you all. Thank you, sir.
Thank you, everyone. Thank you, everyone.